So what does Buffett not like right now? That would be Bitcoin. He says that Bitcoin right now looks a little bit tulip-like to him.
It's not a currency. I mean, it does not meet the test of a currency. I wouldn't be surprised if it's not around in 10 or 20 years.
Why does it not meet the definition of a currency?
Well, because people say, well, I'll sell you goods in Bitcoins, but they change the price of those every time the price of the dollar changes in relation to Bitcoin. They're pricing off the dollar. They could say, well, I'll sell it to you in barrels of oil, but if every time the price of oil changes, they change the number of barrels you have to have. That's not your oil is not the currency.
Curious of your thoughts on that.
Stay away from it.
Stay away from Bitcoin.
Well, it's a mirage, basically. I mean, it's a method of transmitting money. And it's a very effective way of transmitting money, and you can do it anonymously and all that. A check is a way of transmitting money, too. Our checks are worth a whole lot of money just because they can transmit money. Our money orders, you can transmit money by money orders. People do it. I hope Bitcoin becomes a better way of doing it, but you can replicate it a bunch of different ways, and it will be. And the idea that it has some huge intrinsic value is just a joke, in my view.
Checks are actually you're drawing upon something. It's not
you're transmitting money. Yeah, it's dollars on both ends. I mean, from the guy that puts it in.
Right.
Yeah. It's a very fast money order, anonymously.
In terms of cryptocurrencies, generally, I can say almost with certainty that they will come to a bad ending. Now, when it happens or how or anything else, I don't know. But I know this, if I could buy long-term puts, if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short a dime's worth.
Have you thought about trading the futures to take a negative position on Bitcoin?
No.
You would not do that?
No. There's no reason. I get into enough trouble with things I think I know something about. Why in the world should I take a long or short position in something I don't know anything about? So, we don't have to know what cocoa beans are going to do or cryptocurrencies. We just have to focus on 8 or 10 stocks businesses basically that we think are decent businesses. But I do think that I think what's going on definitely will come to a bad ending. I mean, you've got virtually everybody. I have a class. I have 11 schools coming on Friday. The questions will be on Bitcoin, and I won't know the answers.
Although when we sat down, Warren, you did say I should have announced that we were getting involved in Bitcoin this morning.
Well, that is true. I mean, that would be much more interesting to the audience that we were going to issue a whole series of cryptocurrencies tomorrow. But no, we aren't, believe me. And we don't own any, we're not short any, we'll never have a position in them.
Capitalization of cryptocurrencies approached that of Berkshire and Apple last year. And clearly the idea behind crypto will affect conventional banking groups where Berkshire is a shareholder. You always say you didn't go into too much detail to obtain an understanding on cryptocurrencies. So what factors caused you to say that it's a bubble?
Well, generally non-productive assets remain. If you had bought gold at the time of Christ and you figure the compound rate on it, it may be a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, because you can only mine so many. But so what? I mean, what does it produce itself? The check is a wonderful idea. Just imagine how the world would be without being able to write checks or have wire transfer of funds. But it doesn't make the check intrinsically itself worth a lot of money. And if you said you can't use something called check with a little piece of paper, you'd do something else to transfer money. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. You have a hard time. You can think of raw land. I mean, the Louisiana Purchase was, say, $15 million for 800,000 or so square miles of land. In fact, you're sitting on land that came with the Louisiana Purchase, and so what we paid $20 a square mile, and 640 acres in a square mile, and you're down to 3 cents or something. So that was a pretty good purchase of what was then a non-productive property. But it depends. But it's very hard. You can buy stamps. Bill Gross got collected a wonderful stamp collection, and it sold for more money in the end. But it's dependent on somebody else wanting to buy, hoping they will sell it for more money, and so on. And in the end, you make your money out of productive assets. If you buy a farm, you try to estimate what the crops, what amount per acre of soybeans or corn or whatever may be raised, and how much you have to pay the farmer that farms it for you, and what your taxes will be, and various things. And you make a conclusion based on what the asset itself will produce over time. And that's an investment. When you buy something because you're hoping tomorrow morning you're going to wake up, and the price will be higher, you need more people coming into it than are leaving. And you can get that, and it will feed on itself for a while, and sometimes for a long while, and sometimes to extraordinary numbers. But in the end, they come to bad endings, and cryptocurrencies will come to bad endings. And along with the fact that there's nothing being produced in the way of value from the asset, that you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who are trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending. Charlie?
The asset itself is creating nothing.
What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean, those.
That's a greater fool theory. That's what you're saying.
It's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price, does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-productive. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine. If you just look at something and say that's magic, you can do it with shark's teeth or seashells or anything. And they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people, they like to speculate, they like to gamble, and if you can get something particularly if you had something half plausible going on. If you had bought gold in 1942 and you said, we might lose the war, and we might have to run off to some other country, and so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, somebody calls that a store of value. I mean, I think they're delusionary.
Okay. Andrew has a question, too. Andrew.
Hey, Warren, related to this issue of Bitcoin, you saw that Goldman Sachs just last week announced that they were going to create effectively a trading operation around cryptocurrencies and Bitcoin in particular. You've been an investor in Goldman. What do you think of their decision to do that?
Well, they probably think that lots of people are going to get very excited about, well, and maybe already are, but they think there's money to be made trading them. I don't think they're expressing an opinion on the ultimate value. I would be very surprised if the top partners of Goldman are selling their Goldman stock and putting it into Bitcoin. But I want to cover this subject now because my friend Charlie will come on at 8 o'clock and he'll tell him what he will say.
Well, that's my whole entire point. I do want to ask Charlie about it because I think when he talked about the turds, he was referring to this. He said if you're trading this, it's like watching other people trading turds and deciding you want to get a piece of that.
Well, you're not going to get me to comment on that.
Hopefully Charlie's not awake and not watching right now.
Well, the truth is people do trade on very crazy things over time. Imagine people selling their homes to buy a tulip in Amsterdam. If people think they're going to make money the next day, and worse yet, if they think somebody else that they know is going to make money and they aren't going to make money, it just draws people in.